I don't sell anything or anything like that. I'm just showing my trades to people if they want to see how I do it. I gotta tell you, I'm sorry, my voice. I'm getting over this cold and my voice is almost gone. But I can explain next week even better. Day trading is one of those things that nobody could ever really teach you. I mean, you could know the basics about the markets, up and down, whatever. But 80% of trading or 90% is just you, the human mind, your emotions, your thinking, your execution. That's 90% of the game. Everything else is crap. It's 10%. It's nothing. The only way, and I have some videos about that, the only way you're gonna really learn to day trade is by Professor Marketplace teaching you. And the professor is the market. The market is going to teach you. It's going to teach you the hard way until you learn it. Until you learn to follow your rules no matter what, the market is going to teach you. Two things are going to happen. You're either going to give up on day trading or you're going to do what the market tells you to do. And that's it. You're going to forget about what your thinking is, your opinions, your biases, all that crap. The market is going to grab it and just throw it out the window. And after some time of you attending day trading university with taking classes with Professor Marketplace and paying that tuition every 4 months, it is the only way you're ever going to graduate and become an expert in day trading. It's the only way. There's no other way. There's no courses you could take from anybody. There are no lessons you could take from anybody, because the reality is that 90% of the game is your mindset, your mind. That's it, your mind. Your biases, your opinions, your thinking. That's what destroys you. That's exactly why you cannot do it. That's why it's extremely hard for everybody to do it, because the animal brain stops you. The only way you can mold your brain to day trading is through severe losses financially, to the point that you have no choice but to bow to the market and do exactly what the market wants you to do and nothing else. That is it. There's no other way. And that's why most people just don't make it. They just can't do it. They can't do it. They cannot do it emotionally. They don't have a strong emotional sense of governing themselves and being disciplined in that sense. And learning, you have to learn from the market. Doesn't matter. You hear that voice in your mind, you react to it, and the market, if the market believes it's wrong, he's gonna smack the crap out of you, open-handed, just wah, and take your money. And that's the way you learn. So next time you see the same scenario and your voice starts telling you, hey, you're gonna remember, oh, no. Mr. Market, Professor Market, last time I did that, he slapped the crap out of me. I can't do it again. And that's it. You go over that over and over and over and over for a few years. That's how you learn. So, and people don't learn, and people think they learn just, they have all these rules. You write them down. You have all these pre-planned, whatever. You show up and you get smacked down, because whenever you are planning things, whenever you write things down, that's your logical aspect of doing things, not your emotional aspect of doing things. And the emotional aspect of doing things is 90% of the game. That's really why people fail. It's their emotions, their thinking, their biases, their opinion. It's truly who they are. That's what happens. Once you can overcome that, you become disciplined enough to go beyond that. That's when you learn. That's when you start making money out of the market. And it's not even making money. It's kind of like you transfer money from somebody to you and that's it, But unfortunately, the reality is nobody is going to learn until the market, day trading university, professor marketplace teaches you how it's done. That's the only way. So the only reason, I mean, if anybody asks my opinion, I'll give my opinion. At the end of the day, it doesn't really matter because the market is the ultimate professor. That's it. That's the only way of learning is the market. Nothing else. Nobody else. Nobody. Not me. Nobody. I don't care if you buy a course from anybody. You're not going to learn. I don't care. I don't care what course it is. You're not going to learn. So there's two ways of doing it. You learn the hard way, or you get employed in one of these places that have very strict rules that if you don't follow the rules, you get fired and you lose your job. So you have to follow the rules. Those are really the only two ways of doing it. You either do the job under duress because you could get fired any minute that you don't follow a rule, or you learn through the market teaching you the hard way. Honestly, if you want to try to pull money out of the market on a daily basis, that's the only way to take money out of the market. It's just a few seconds, a few minutes, maybe the most, out of a quick moving stock. That's basically it, because you want to take advantage of the fluctuation of price levels. You know what I mean? That's it. We don't know the future, man. I don't know what's going to happen 2 seconds from now. You don't know. Nobody knows, right? So you have to do the best you can with the information you have right now in real time and take a high probability risk in a trade that more likely than not is going to return with a profit as long as you sell on time, That's it. That's the key of the game. Either that or you're a long-term investor, for days or weeks or whatever. That's it. But the main aspect of it, the emotional aspect of it, is just is going to be indoctrinated into you through severe financial losses. There's no other way, unless, like I said, you went to an elite school, elite university, you get hired by a big firm, and then they put you through the training for 2 years, and then you start trading their money, a small amount. And if you don't follow the rules, that's it. You're fired. Good luck. So that's the bottom line. The reality is, it doesn't matter. At the end of the day, you're gonna put your money in this thing. Two things are gonna happen. You either profit or you don't profit, right? God forbid you profit and you're just beginning. The worst thing could happen to you is you're beginning trading and you get lucky for a few days and you start making money. That is the worst thing could happen, because it's an incentive to not allow the professor to teach you, and the marketplace is the ultimate professor, nobody else. Look, the reality is, if I buy a stock at $1, I want to sell the stock at higher than $1. I don't want to sell the stock lower than $1. If I sell the stock under $1 when I bought it at $1, I'm losing money, right? That's the reality. And if I want to sell the stock higher than $1, even if it's $1.05, that's profit, right? Then what really matters is the amount of shares I'm buying. The more shares, the more money. But that's it. As long as I understand that that's the job, extract profit from that movement. Now, the reality is there's a stronger likelihood every day that a stock could move 15 cents, 20 cents. It is highly unlikely that every day you're going to have stock that moves 50 cents, $1. I'm not saying it doesn't happen. I'm just saying it doesn't happen all the time. What is more likely is that it moves 20 cents, 15 cents, 35 cents, something like that. And you have to take advantage of that. That's where the profit is. If I buy a stock with the idea that somehow I'm gonna sit on it through its ups and down, because everything, I mean, they all go, sorry about that, they all go up and down. If I buy the stock with the idea that I'm gonna sit through all the ups and downs as it climbs up, well, you know, I'm hoping, because I have no idea what's gonna happen. My stop losses are just 1% or 2%, depending the amount of shares I buy. I don't give it too much room. Like I said, I'm not in the business of giving money back. I mean, I do, but what I'm saying is I attempt not to. I want to take from the market. I don't want to give it back. At least that's the goal. But I think the biggest thing I think is just the emotional aspect. Just it's difficult for people to handle. Look, if you care about your money and you don't want to lose your money, but you're not disciplined, well, the market is going to teach you. It's going to teach you how important it is to protect your money. And it's going to teach you through severe losses all the time. That's it. That's what it comes down to. After you get slapped a few times through the financial marketplace, you're going to start understanding how hard it is in your face until you start protecting your face from being slapped. You know, that's exactly what's going to happen. And I know it's kind of like harsh to hear it, but the reality is everybody has their own mindset and opinions and biases, and they're gonna die by it. Like that's it. You can't change that. That's how they are, how people are. The only way to change that is through severe pain. So severe beatdowns until your life is on financial life support, is that you learn the way the market wants you to learn. And that's it. If it comes down to that, that's fine. Some people could spend 10, 20 years trying and they never make it. Why? Because they just don't want to learn from the financial marketplace. I mean, you're trying to take money from the financial marketplace. Don't you want to learn from them so you could know how to do it? Or you want to put your opinions and biases because you think you're the expert at it? No, nobody's an expert in the financial marketplace. The marketplace is the only expert. Nobody else. Because the market doesn't think. The market has no emotions. The market is what it is, just a market. No, think about it, right? Every retail trader, every trader out there is a human being for the most part, right? I mean, I'm not talking about high frequency computers, whatever. I'm talking about regular human trader, right? They're humans. What do they all have in common? They all have in common their emotions, their thinking, their biases, their wants, their greed, their fear. That's unique to everybody. That's one thing the marketplace that doesn't have. The Nasdaq, the Dow Jones, I mean the exchanges, they have no emotions. It's just a computer. It's a mechanism. It's mechanical. It simply records the price and the amount of shares that buyers and sellers agree to transact between them. That's all it does. Nothing else. There's no thinking. There's no emotions. There's nothing. It doesn't speak. It's nothing. It's just a mechanical system that records the price of a stock at the time that some buyer and some seller agree to exchange that stock for value, for money. That's it. That's all it does. Okay? Think about that. If the market has no emotions, no thinking, no biases, no opinions, and we are the ones that have all those things inside of our mind, why do you think some traders do make it and then most of them do not make it? It's not because of the market. And think about it. Everybody has access to the same studies. And the people that make it, they don't look at the studies the way that a newbie does. They don't look at it like that. They don't look at the chart the way that new traders do, or that people don't know how to trade do. They don't look at it the same way. It's not that important when it comes to making money out of the market at all. because it has nothing to do with that. Okay? You have to understand that everything you see on the chart already happened. It's gone. It's not going to happen again the same way ever. I'll give you an example. Right here. There was, what time was this? 1:01 p.m. market close. There was 3,248 shares. The price, the high was 1532, the lowest 1523. All that means is within that minute gap, buyers and sellers transacted shares to that amount between those price ranges. That's it. That already happened. That same scenario is never going to happen ever again. Those same buyers and same sellers are not going to meet again to transact those same shares for the same amount of money ever again. It's not going to happen. You understand that? If you understand that that's never going to happen ever again, and you look back and it's the same here, and it's the same here, you could look back 11 o'clock in the morning, that candle there, the transactions covered within the minute gap of that candle are never going to take place the same way ever again. You have to understand that. If you know that, what makes you think that all these people that transacted in the past a certain amount of shares between them, who are never going to meet again the same identical way, what makes you think that has anything to do with the current price of the market? It's ridiculous. It's illogical to think that. But yet, people swear by the past and they make all these lines and all these things. I don't know why. You know what? Honestly, I did it when I first started a long time ago. Back then it was called, not Ameritrade. It was Ameritrade or something else. It was before Ameritrade. Everybody that begins, that starts trading, they have all kinds of things on the charts. I did too back then. Everybody, because they think, we all think at the beginning that somehow that's gonna help what we're going to do, because somehow what happened in the past is going to happen again. It's not, and that's what people don't get. It's never gonna happen again. And until people learn that, I think it's very difficult for them to day trade, because they're so occupied with history that it would be very hard for them to adapt to the reality that of what's happening right now. And the right now is where the money is made. You know, that's it. Not the past. You have to protect your money no matter what. Protect your money no matter what. But most importantly, you have to understand what trading is. You have to understand what trading is. And it's very simple. It's very simple. It's just people have difficulties understanding what it is. Think about it from a logical perspective, okay? Let's say you want to sell a pair of shoes, and you go to an auction house and you tell the auctioneer, hey, here's a pair of shoes, please sell them. And the auctioneer stands there and he says, do I hear 100? Do I hear 100 for the pair of shoes? The room is full of people trying to buy it, right? And one buyer is like, I'll pay 101. And the other one, I'll pay 110. And the other one, I'll pay 115. Next thing you know, within a matter of seconds, there's some guy in the back saying, I'll pay 700 for the pair of shoes. And then another guy, I'll pay 750. And they continue climbing the price up all the way to 900. You, as the shoe owner, will you be happy? What would be your answer? What would be your answer? as the pair of shoe owner, the owner of the pair of shoes, who took the pair of shoes to the auction house, and people there were fighting to buy that pair of shoes. Only one pair of shoes available. They were fighting for that pair of shoes, and they raised the price from 100 all the way to 900. Will you be happy as the owner of the pair of shoes? Think about that real quick and give me your answer. Interact with me. Tell me what would be your answer. Common sense tells you, yes, you'll be happy. You paid $20 for the pair of shoes. You took it to the auction house. The price began at 100, and all these people in the room are so stupid that they want to buy your pair of shoes, which, by the way, you wear all the time and they stinky, and they want to pay 900 for it, right? Think about it. You'll be happy. You literally made $880, right? That's exactly what's happening in the ask. That's exactly what's happening in the ask. You see in the ask, the top row, the price right now is $221. Okay? When people are buying it, people are fighting to buy it for that price. What's gonna happen to the price? It goes up. You understand? Now, I'm gonna give you the other scenario so you could get it. You bought the pair of shoes for $20 at the auction house. I mean, before the auction house, and you wanna sell it. Same scenario. You take it to the auctioneer, and he says, I'm gonna put it at $100 price. There's a room full of people. Do I hear 100? Do I hear 100? 100, 100? And nobody says crap. And the guy is like, okay, fine. Do I hear 90, 90, 90, 90? Nobody says crap. Nah, nobody wants that crap. Those are stinky shoes, old shoes. Well, they don't want it. And the guy continues, do I hear 80, 80, 70, 70, 60, 60? He goes all the way down to 10. And you're like, holy crap, I paid 20. And he's like, 10, do I hear 10? Bro, nobody wants it. Finally, some dude in the back is like, I'll give you $1. And the guy's like, do I hear $1? Do I hear $1.10? $1.10 going once, going twice, sold to the man in the back for $1. Right? Dude, that's the bid. You get it? It's going against you. People are bidding down the price. All right? That's exactly what happens in the level 2. And that's exactly what the marketplace is. Now, the question to you is, if you want to make money to the upside, do you want to be in the room when people are shouting the prices from 100 all the way to 900? So you could jump in at 100 and then get rid of it at 900? Or do you want to be on the other side of the room when they're declining the price from 100 to $1? Which one do you want? If you're a day trader and you're trading to the upside, you want to be when the price goes from 100 to 900, right? Now, I'm going to give you another hypo, and this is going to flip your mind. Let me know when you're ready. Smash that like, and I'll tell you exactly what the next hypo is. Let me know when you're ready, because it's going to blow your mind. You're never going to see trading the same way ever again. I'm telling you that. All right, here we go. All right, cool. All right, this is hypothetical 3, right? Same scenario. But instead of you being the shoe owner, it's your neighbor. And instead of being today, was 20 minutes ago. Your neighbor shows up with old broken shoes the same way you did, and he paid $20 for them. But his shoes were slightly more worn than yours. And he goes to the auctioneer, it's like, I want to sell the shoes. And the auctioneer says, I'll start the bid at 100. And everybody gets ready, the same room full of people. And then, do I hear 100? I hear 100. And he goes all the way to 175. Do I hear 175 twice? 175, 3, sold to the gentleman in the back for 175. Okay, did you get the hypo? Now let me ask you something. Does it matter to you right now, with your pair of shoes climbing from 100 to 900, that your neighbor sold his 2 minutes ago, 20 minutes ago for 175? Does it matter? Does it change the outcome for you? What's your answer? Your answer will be, it has nothing to do with my transaction. My neighbor's transactions 2 minutes or 20 minutes ago, where his pair of shoes got sold for $175, has nothing to do with mine being sold right now for $900. Do you understand that? Has nothing to do with it. And that's exactly what you see on the chart. What you see on the chart, okay? Anything past whatever is forming, anything to the left of what is forming, is your neighbor. It's not your pair of shoes, it's your neighbors. Not just one neighbor, a bunch of neighbors. Everybody in the block, everybody in the city, all of them just sold their shoes before you did for either more or less than you. But that has nothing to do with your auction of your shoes right now. You have to understand that. It has nothing to do with that. Because every time an auction ends, the doors open and new buyers come in and they go through the whole process. Even if it's every minute, new process, new. They're all different people. You understand? Has nothing to do with that. So when you're looking at the price at the level 2 right now, the current price right now, that has nothing to do with what happened 2 minutes ago or 30 seconds ago. Has nothing to do with it. It's brand new auction house, brand new auctioneer, brand new pair of shoes. That's what people don't get. People don't get. They're stuck thinking that somehow the past is going to influence what's going to happen right now in real time. And it's not. You could have all the support levels you want. You could have all the resistance you want. If World War III breaks out right now, the entire thing will collapse. Did the support levels tell you anything? No, of course not. That's stupid. You know, some people might not get it. Some people are, are a little bit slow. Some people are faster. It doesn't matter. But the reality is, everything that happened in the chart, everything you see on the chart to the left already happened with people that have nothing to do with you. People that will never meet ever again. People that will never sell a pair of shoes the same way ever again, ever. And that's the key. You understand? That's the key. Because once you understand that, then you look at the level 2, you see the current price, the current ask, and the current bid. And the only thing that comes to your mind is on the ask, is the auction house, people increasing the price up, and you got people buying it. People want to buy it. That's what you want to see. Because when massive amount of people are buying it, the price is going up, no doubt. And that's what I want. Now, if I show up and the price is going down, that means the other pair of shoes, the one that goes to $1, well, guess what? I'm not going to fight those people to try to bring the price to $900 because clearly they don't want to buy it. And if they don't want to buy it, who am I to force them? Nobody. You could only go with what the market gives you, nothing else. So if the market is going up to the 900, the pair of shoes going to 900, you go with it. If the market is going to the pair of shoes to $1, you don't go with it. You stay the hell out. Let me know if you understand my hypotheticals here or analogies, But I think that's the best way to explain it. I have more examples, but I think when you start looking at the marketplace for what it is, then you're gonna start really doubting whether you want to expose your money to risk without having a good, solid foundation, that there's a stronger likelihood, meaning more likely than not, your money is going to come back to you with profits. That's it. And when you start learning that, then you can avoid the crappy trades that more likely than not are going to give you losses. And that's the key. You stay away from that. You don't trade them. You only trade when there's a more likely than not scenario of making a profit. And that's it. That is it. And if even then you jump in and the price begins to go against you, well, you don't let it hit your stop loss. You take your freaking money before it declines anymore, because the market is never wrong. You are, we are. If I get in and I don't get an immediate profit, I'm wrong for even getting in. Why should I compound me being wrong by allowing the market to take my money from my entry to my stop loss? That's stupid. The stop loss is only an emergency mechanism. It's the emergency parachute when you skydive. In case your main parachute doesn't open, in other words, if somehow you freeze and you can't sail on time, your emergency parachute deploys and gets you out of the jam. That's reality. But you think I want my emergency parachute to deploy? No. Because if my emergency parachute has to deploy, that means my main parachute was not deployed because of me or mechanical malfunctions. The point is, I should be able to be strong enough emotionally to sell when I see my money being taken away from me. So every time you look at the chart and you look at the history, the candles in the chart, any candles you see there, because I got to tell you something. If you look at my screen here, you see this first candle being created? Why you think that's being created? Do you have an idea why? How? Do you think like there's somebody hiding inside my computer creating a candle for everybody? No. Like, how is that candle being created? Why? Why is it being created? How is it being created? What information is being used to create that candle? Do you know the answer? Do you even know the answer? How the stupid candles are created in the chart? Okay, time and sales is the name for, that application that shows you the price. But do you know how it's created? Absolutely not. Do you know how it's created? Bobby, you have an idea, but that's not it. It goes deeper than that. And people don't even know. That's the funny thing, is like people want to day trade and they don't even know how it's created. Like, think about it. I'm not trying to go off here on a rant. I'm just trying to show you how people are so off when it comes to day trading. And then they wonder, how come I don't make it? You don't have the basics. Exactly, my friend. A group of buyers, a group of sellers, one and one at a time. Just to make it simple, they both agree to transact, exchange money for a specific stock or amounts of stocks, of shares. Once those people say yes to the transaction, like buying a house, buying a car, once they say yes, that information, the price, the time, the amount of shares that these people agree to is recorded. It's a record. They take a picture of it. They write it down on a piece of paper and they photograph it with a camera. They just take a picture of it. You understand? Every single trader, buyers and sellers, when they agree to exchange money for a stock, the marketplace, the exchange people, they're gonna write it down on a piece of paper, so many shares for this price at this time, and take a picture. All those pictures, one behind the other one, is what you see on the tape. That's exactly what you see on the tape, one after the other one. And that, once it gets in the tape, that information is transferred to the chart and it creates all those stupid candles. So every time you see the candles, you're looking at a recorded picture of what some buyer and seller did in the past, not now. Because the now hasn't been recorded yet. Literally, only when they agree is that it's recorded, not before. So what you see on the tape is what they already agreed to and it's being recorded. You understand the difference? By the time you see in the chart, 5 milliseconds already passed. You're late. The only way you can tell is by looking at the first row on the level 2. Because the row on the level 2 is the people negotiating before they agree to it. You understand? That's it. That's it. Because remember, when market orders come in, they take from the first row on the level 2. It's really level 1, but that one. Everybody else hanging out in the level 2 below the first row, they just limit orders for some future time, for a certain number of shares. That's it. It's irrelevant. It doesn't mean that it's going to happen. It's just they're pending there. Maybe it will happen, maybe it will not happen. You don't know shit. You don't know crap. You don't know if it's gonna happen. It's just they're hanging in there, you know. They're listening to music, they're jamming, they're chilling, watching TV. They're just waiting. The first row is the people negotiating. So let me ask you, I'm gonna put it in best terms. And this is the best class you'll ever have. This is it. You ready? Let me know if you're ready. You're right. Was in the past, it tells you a lot of information about what those traders agreed to in the past. It tells you jack about what the traders are going to agree now or in the future. You understand? There's a big difference. It's a big difference. Now, are you gonna put your money at risk based on what people have agreed to in the past? Not knowing what's happening in the future or now? That's your risk. It's your money. You choose which way you want to go. Do you want to go to the auction house where the price is going from 100 to 900 for the stinky shoes? Or you want to go to the auction house where the price for the stinky shoes is going from 100 to $1.75? You choose. And that's the key. You're not going to choose based on your neighbor's transactions in the past. That's stupid. That's gambling. That's throwing your money to trash because your neighbor's transactions in buying the stinky shoes in the past or selling them has nothing to do with what's happening now or is going to happen now. You don't even know if the price of the stinky shoes is going to make it to 900. You literally, in the level 1, the first row in the level 2, they're literally going through the auction house bidding process. They're raising the price. Do I hear 100, 200, 300, 400? That's exactly what's happening in real time. Once the auction house says, sold to the gentleman in the back, that's it. They already agreed, it goes to the tape. How do you see that? Because the price changes immediately to a different brand new auction place. Yeah, but here's the problem. It gives you an idea of what could happen. Here's the problem with that. What could happen doesn't mean it will happen or it's more likely to happen. You're just guessing. It's 50-50. You're gambling. You're hoping it could happen, but it can easily not happen. And that's where you lose money. Thinking that could happen is what causes you to lose money. You're throwing money in could happen instead of throwing money more likely will happen. There's a big distinction when it comes to that. You go open the dictionary, look at the definition. What could happen? Okay, that's one. And the other one, more likely to happen. Which one is 50-50 and which one is greater than 50-50? You tell me, where are you gonna put your money? What could happen or more likely it will happen? Which one do you like? Look, man, all the studies, everything you see on the chart is designed based on what already happened. MACD, EMAs, whatever, doesn't matter. They're all based on historical information. Has nothing to do. It's not going to influence the present or the future. You understand? I think it's great for all of us to learn more from each other experience, in trading. And that's, I think, the goal. Unless you want to go through the extreme financial meltdowns that will lead to learning. If you want to go through that, that's fine. You could just stay in a bubble and learn from the marketplace. It's going to teach you. It's going to teach you the hard way. I think the best way to think about it is the hypotheticals about the stinky shoes. The stinky shoes. Just think about it from that way. The size order you see in the level 2 is how many pairs of shoes that person wants to buy. Okay? So right now, on the ask, there's 50 to 100 pairs of shoes that want to be bought at 223. And on the bid, there's 7,000 pair of shoes that somebody's willing to pay for at 222. That's it. Now, at least me, I want to be in the auction house when people want to pay more for the shoes, not pay less. The bid is always going to show you people that are willing to pay less than what the sellers are asking for. And the ask is what the sellers are willing to sell the shoes for. You understand? So I want the price to go up. And when I go into the trade, I want to have some level of certainty that is more than 50-50, that more likely than not, whatever money I put in there is going to go higher in profits. You understand? So if I go into a trade, I want to make sure to a certain extent, I'm able to tell this is not 50-50. This is 70-50. This is 90-50 chances of me taking a profit from the market. You understand? That's what I want. So I want to go running to the auction house where the stinky shoes are going from 100 to 150 to 200. I want to catch it right there. I want to jump in and say, you know what? 150, I'll get it for 150. And then when it gets to 900, and the idiot in the back is like, I'll buy it for 900. And the auctioneer is like, do I hear 900 once? Do I hear it twice? The moment I hear, do I hear twice? I'm out. I sold it. I'm out. I'm running. I'm out of there. I'm running. You understand? Because in the day trading aspect, if nobody buys at 900, well, the price is going to start heading to the last offer of 850 or 800 or 750, 700, 650. You get the point, right? 100, 90, 80, 70, $1.75 again. And that's the key. You want to get the hell out. When you hear the guy say, do I hear once? Do I hear twice? You're out, right? That's the same way. Now, if they're still fighting for the price, I got in at 100 and they're fighting for I got in at 110 and they're fighting for the price and it's like 900, 950. Do I hear 1,000? Do I hear 1,050? Do I hear 1,100? If they're still fighting, I'm hanging out. I'm looking at them. As a matter of fact, I bring my buddies in. Hey guys, come over here. Check this out. These people are fighting over the price. Hey, I start calling my friends. Hey guys, come over here. First, I'm gonna call one friend first. Hey, first friend, come over here. Look at this. We're hanging out. It gets to 1,200. I'll call my second friend. Hey dude, come back over here. You need to see this. Now it's 3 of us hanging out. Bro, the price is by 1,500. How stupid. And then you hear the auction house. Do I hear 50-50? Going once, going twice. My friends and I, we run. We're running. We're out of there. We're done. I'm taking my face. I'm running. I'm not going to get caught. When it goes back to 1,500, 1,450, 1,400, I'm out. My two friends I bring in, well, those are the extra shares I'm buying as the price is going up. You get the point? Right? I buy a 110. By 200, 250, I'm calling my friend. By 500, I'm calling my other friend. When it gets to 1,000, I might even call an extra friend. And when I hear the auction house saying, going once, going twice, I'm booking. I'm out. Dude, that's profit. Like, that's trading. You understand? Like, that's it. That's it. That's all there is to it. And you could see all that in the level 2. Neighbors stinky shoes not gonna let me know anything. Because in reality, you don't even know your neighbors. In the financial marketplace, you don't know them. You don't know anybody. You understand? You don't know. You don't know who bought, who sold. You don't know any of that. So you have no idea. Logic tells you that it is impossible for those buyers and sellers to ever meet ever again in person and exchange the same stock for the same price. It's not. If you're thinking that, you already have your opinions and your bias set in stone, and day trading will be extremely difficult for you. If you are able to reason why past price will never be the same, then you're doing better. But if you stuck to the past, you're gonna have serious issues ever mastering day trading. You're never gonna get it. You're never gonna get it. You're always going to fail. That's it. That's the reality. And by the way, I'm not here to change your mind. You think I care? I don't care. You can do whatever you want. That's your thing. You know what I mean? Like, I wish you the best, but it's up to you. You either learn through experience by the financial marketplace and adapt to the reality and understand that you might not have an idea of what it really is, and then learn from that, make your rules to make sure you don't make the mistakes again, and maybe you become profitable. Or you could just say, I'm right, the market is wrong, and I'm gonna do it my way, and good luck. But I gotta tell you, the market is never wrong. Logically, the market is always right. What? You think the candles are gonna call you and tell you what's going to happen in the future? Come on, bro. Come on, bro. Use your brain. Like, really? Like, really? Like, you think that? Dude, if you think that, I have a few things to sell you, okay? I can sell you quite a few things. If you really think somehow the market is gonna send you a notification of, hey, I'm confirming what I'm going to do in the future. Come on, bro. Really? Like, come on. Come on, use it. Logically, use it. Really? You think that? Man, if you really think like that, I got a lot of things to sell you, bro. Very expensive thing I could sell you, or cheap things, whatever. I could pick something. Because you're bound to fail if you think that. Bound to fail to think that. And I think that is the biggest difficulty for people to have. How to rewire the brain to understand the difference between your neighbors watching TV, having sold a pair of shoes weeks before, days before, hours before, minutes before, to your money right now in the current auction. It's a big difference. Your money now in the auction house should be most important to you than what your freaking neighbors did with their money, bro. That's their money. That's not your money. Your money's right here, right now. Not in the past. That's not your money. That's not your money. And the people in the auction house, they don't care what they sold those pair of shoes for, because they're not the same. They're not the same pair of shoes. They're different pair of shoes. They're all shoes. They belong to the same company, Nike, but they're not the same one. They're not identically the same one. They're different. So, why would you think that your money, losing your money, should be more important regarding what your neighbor did than what's happening in the auction house in front of your freaking eyes? I mean, that's ridiculous. It's your money. Think about it. It's your money in real time. Do you want to risk it based on what your neighbors did? I don't care about my neighbors in comparison to my money. I want my money. I could be without neighbors. As a matter of fact, I barely have neighbors here, but you get the point? It's your money. You cannot care more about what your neighbors did than your own money. And what your neighbors did in the past, selling the stinky shoes, It's not gonna influence the people in the auction house buying the pair of shoes right now. They don't care about that. They're not even thinking about that. They're thinking, shit, can I buy it for 900? Or can I buy it for 700? Oh man, I got 750 in my pocket. 750! Oh, I hear 750 in the gentleman. Do I hear 800? Do I hear 800? Somebody 800. I'm like, oh crap, I can't buy the shoes. Shit, damn. That's what I'm thinking. I'm not thinking as the buyer. I'm not thinking, what did that neighbor in that block over there did 2 minutes ago? Wait, hey neighbor, can you? Come on, bro, please. Really? Like really? You think that? Boy, this is gonna be a difficult thing for you if you think like that. The reality is, the only good information you have where the price is level 2. That's it. Nothing else. 2 seconds from now, there could be a world war and the entire thing collapses to zero. You think your friends, your neighbors told you, hey, dude, in 2 seconds, the price is going to zero because my pair of shoes got transacted at whatever amount. No, of course not. That's stupid. Because nobody knows what's going to happen in the future. As a matter of fact, think about this. Let's say all your neighbors from a minute ago to 2 hours ago, all your neighbors showed up to the auction house, they sold their shoes. Oh, somebody bought the shoes. That's, within the past 2 hours, every minute, a new neighbor came in, they went through the entire process. Now you show up with your pair of shoes. The auctioneer starts 100, do I hear 100, 100, 110, 120. Now, as the price gets to 150, okay? All the buyers in the room decide, we don't want to buy it no more. What happens to the price? You think it's going to go to 200? No, it goes to 100. And if they don't want to buy it, where does the price go? 90, 80. How about this? The price gets to 150 and all the buyers in the room says, we only willing to pay $1. Auctioneer, and the auctioneer here says, okay, do I hear $1? What happens? They're all gonna fight for the pair of shoes for $1. So the price just went from 100 or 150 to $1 so fast. You're gonna tell me they didn't even have the courtesy to call my neighbor and get the input as to what they should do? They don't care about your neighbor. They want to pay the least amount they need to pay. They don't care about your neighbor. Nobody cares how much your neighbor sold or bought a pair of stinky shoes 2 minutes ago. Nobody gives a rat's about it. You understand? Nobody cares. The people buying and selling, they just want, look, whoever is selling, they want to sell the highest. Whoever is buying, they want to buy for the least amount. That's it. They don't care about your neighbor and the stinky shoes. They don't care. So why are you consuming your mind thinking that those people care about your neighbor if they don't care themselves? They don't care. Why do you care? You care because that's what's in your mind. That's your bias. That's your opinion. That's your emotions. That's what you want to think. And that dooms your trading. That's the bottom line. Take it for what it is. You're going to learn. You're going to learn the hard way if you don't adapt. But you're doing it wrong. If you think your neighbor's past transactions in selling a pair of shoes or putting it for auction has anything to do with the price going on right now, I have to beat your neighbor to death because your neighbor is watching TV while people here are thinking that his shoes, stinky shoes transaction for $75 or $300 makes any difference to these buyers in a room that are willing to bring up the price to 900 or 175. Like that's ridiculous, bro. Forget the neighbor. Nobody cares about the neighbor stinky shoes. Your neighbor went and left. He's gone. He's watching TV. Your neighbor is just that, a history in the past. It's memory. It's gone. He has no power to influence the price coming next. Now, you're asking me, how would I read the level 2? Well, would I know how I read it? First, you have to understand exactly what the level 2 is. And I'm gonna expand it here so you can see it better. All right. That's what I'm doing right now. So check this out. The first row here. Okay, look, first look at the montage here. You see last to 26. That's the price, right? Can we agree to that? That's the price, 226. Okay. Now, you see the 225 here in red? Yes. 225 here in red. Bid, bid. Okay. All that means in the first row here only. Okay. Forget this. Only the first row. Okay. The price here is called level 1. The first row here is level 1. I know. Listen, I gotta explain this real quick. I know we call this whole thing level 2. In reality, it's not just level 2. It's level 1 and level 2 combined. You understand that? The first one is always level 1. So when you see the 224 here, level 1, you see it here. And when you see 225 here, level 1, that's the ask, 225. Now it's 224. You see it went down. What does that mean? That means right now, in real time, in the auction house, people, instead of being just one auction house, okay? Imagine there's two auctioneers in there, but the same thing. One of them is holding right now in real time 3 pairs of shoes. You see that? 3 pairs of shoes, and he's asking the people, 3 pairs of shoes for 224. Do I hear 224? Do I hear 224? Right now, nobody's answering the shit. Nobody's saying I want it. Nobody's saying that. It's like, dude, 224 once, twice, 3 times, 4, 5. Anybody? 224, please, 224. 224. Do I hear 224? Man, nobody's buying the 3 pair of shoes. Finally, he sold them. Okay, fine. 224, 1 pair of shoes. Anybody? 224, 224. Do I hear 224? Nobody's buying it. You understand? The buyers in the room, they're like, no, bro, I'm willing to pay 223 up to 20 pairs. I'm not paying 224. I want to pay 223. Give them to me for 223. By the way, I want 20 pairs. Do you have 20 pairs? And the guy's like, no, dude, I got 2 pairs. Oops, I cannot sell you 2 pairs. You're still going to be short 18 pairs. Where am I going to get those 18 pairs? Well, you're not going to get them because there's none. Get it? There's none. So they're going to have to wait. Somebody decides to sell the pair of shoes for 223 for 18 pairs. That's the key. That's it. There's nothing else to it. That's the first row. Okay? So think about it in terms. In this one, they're making offers. They're offering. I'm selling 16 pair of shoes at 223. Do I hear any buyers? And if you add all the pair of shoes here, 1, 2, 3, 4, you get the point, right? Imagine all the 223 was just one line. Let me go to iNet. Maybe in iNet, you can see it better. Same thing. You see it? Same thing. Now, I combine all the pair of shoes into one. You see that? You see 223, how many pair of shoes? Look over here. Now it's 5 pairs, 50 pairs. If I go here, you have to count to get to 50. But that's the point. So let me do it this way so you can see how simple it is. Right here, the auctioneer is saying 50 pairs of shoes, no, 500 pairs of shoes for 223. And the buyers in the room, they're like, nah. We'll buy 300 for 221. And the guy stuck there like, okay, well, okay, fine. 222, the buyer's like, fine, look, 223. You see? And now the new auction house is like, no, forget that. 300 pairs for 225. 225, do I hear 225? And the buyer's like, nah, I want 223. You see that? Now, that's where the tape comes in. Now look at the tape. Okay? Because I told you, in the first row, level 1 is just the people trying to negotiate the price, right? This is the tape in real time. Okay? So the guy right now is at 225, 300 pairs for 224, 225, 225, 300 pairs. Okay? Nobody has bought it yet. You see that? It's not in the tape. Come on, people. Okay, let me put the tape over here so you can see it better. Okay? And I'm gonna put INET so you can see it. Come on, guys. 228, 300 pairs, 228, 228. Do I hear 300 pairs for 228? 228, nobody. Going once, going twice, anybody. 228, please buy the pair of shoes. 300 pairs for 228. Nobody buys it. Nobody buys it. It's like, nah. Do I have any limit orders hanging in there for 228? No. So the only ones you could sell to is the bid. People are willing to buy it, but they're only willing to buy it for 226. So there has to be some new order that comes in and says, I'm willing to buy for 228. 300 pairs for 228. Does it happen? It hasn't happened yet. It's still hanging in there, waiting for some fool to buy it. Because people always want to buy for lesser amount. Nobody wants to pay top price. People want rebates. People want discount. People want cheap, right? Oh, look, somebody bought it. They bought all the pair of shoes. You see that? They bought it. Now the auction house is like, okay, fine. I got 300 more for 229, 229. And the whole process continues over and over and over. You get it? That's all there is. That's it. That's it. That's all there is to it. Now, how do you know when you're gonna enter the trade? The auction house is raising the price from 228, 229, 230, 235, 240, 250, 255. Don't you wanna see that? If you're trading to the upside, don't you wanna see the ask flying up? What does that tell you? What does that tell you if you see the price in the ask flying up, and instead of seeing 300 pairs of shoes, you see 20,000 pairs of shoes, 50,000 pairs of shoes? What do you think is going to happen to the price? What do you think is going to happen? When instead of seeing 100 or 300 orders of pair of shoes, you see thousands of pair of shoes. That's high volume. But what does high volume mean? High volume of what? It's bigger than momentum. It's bigger than high volume. I want you to think critically. I want you to really think what it is. Think hard what it is. I'm going to give you an example, okay? Let's assume that the average cost for a share is 226, right? And look at this big candle here, past volume, 7,800 shares. Do the math. How much money is that? 2.25 times 7,900 shares, $17,000. Not a lot of money, right? Not a lot of volume. Imagine being $50 million in a candle. What does that tell you? If there's an order here for 50,000 pair of shoes, that comes out to $50 million. And over here, you have an order of like just $1 million. What do you think is going to happen here? What critically think is going to happen here? Two things could happen. The order is immediately bought by somebody, okay? And the price continues up with the next pair of shoes. Or nobody buys it and the price goes low. But if a large order of pair of shoes comes in and they pay top money for it, and you know that because immediately, in a matter of milliseconds, it goes from 227, 228, 29, 30, 31, 32, and all you see are huge numbers on the size. Huge orders here, 50,000, 10,000, 20,000. And over here you got 100, 500. You could see the difference, the disparity, right? Huge people buying this thing and very little people willing to pay less. When you have a small amount of people paying less and you have a huge, dramatically huge amount of people willing to pay more, because think about it, even the limit orders get more expensive as you go down. You see that? When people are willing to pay more And you know that because this thing keeps going up. And less people are willing to pay less. Logically, what does that tell you? Objectively, you could see it with your eyes in real time. What is that telling you? There's a huge demand of people buying. And when there's a huge demand of people buying, what do you think it happens to the price? It gets more expensive. It continues to go up, 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 up. As long as there's buying, price continues to go up because there's a huge demand. The whole trading thing is supply demand. The more demand, the more expensive crap is gonna get. The less demand and more supplies, the cheaper it gets. And that's exactly what happens. If your stinky shoes are the last pair of stinky shoes on planet Earth, the last pair, that's it. Everybody's walking around barefooted throughout the whole country. You go to the airport, barefooted. Go to the supermarket, barefooted. Everybody's barefooted. You happen to be the only person with a pair of shoes in the whole planet, and they're stinky shoes. How much you think people are willing to pay for those shoes? $900, $1,500, or $1? What do you think the highest price? What do you think the price is gonna go at the auction house for the stinky shoes? If those were to be the only shoes on the planet, you think it's gonna be cheap or it's gonna be expensive? What do you think? You happen to be the only owner of the only pair of shoes on the planet that happen to be stinky shoes at the auction house, and you have no idea what the price will be when the entire population has no shoes. I know it's extreme, but I want you to think critically why it's so important. The reason it's so important is because there are no more supplies of stinky pair of shoes or brand new shoes. That is the only pair. People are going to fight and kill to get the only pair of shoes that exist. They're willing to pay a fortune. The price is going to go from 100 to millions just for one stinky pair of shoes because there's no more supply. That's it. Whoever has this pair of shoes doesn't have to walk barefooted. That's only one pair of shoes. The same thing happens with the stock. When there's a small amount of stock shares available and you have massive amount of buyers wanting to buy, well, what do you think is going to happen to the price? That's right. It goes up dramatically. So if you want to make money to the upside, what do? Do you wait until the price comes down to you? Really? Oh, wait. I know, I get this one. I know. I know what you're going to do. You're going to open your email, okay? And you're going to see the price increasing dramatically. And you're going to wait for the market to send you an email confirming that you could jump in. That's stupid. That's ridiculous. Like, who thinks that? Confirmation what? Why, you think the buyers who, by the way, are in a hurry to buy at a higher price, but the cheapest they could, because the price is dramatically going up. You think they're in a hurry to buy? You think they're gonna send you an email? Hey, listen, get ready. Your confirmation is coming in 5 minutes. Come on, bro. Think. And that's a different thing because that's gonna make the supply demand even greater. That's why I do the low floats. Low floats creates a spike in the supply and demand, and that's what you want. At least that's what I want. But the point about explaining the level 2 is when there's a huge demand. Because, how do you see it? You see it because the ask is going up. The price in the ask is increasing super fast with massive amounts of orders. meaning that the people are buying the crap out of it. And when people are buying the crap out of it, isn't that confirmation on its own that the price, in fact, is going up? Like, you cannot argue against that. That is a clear current situation happening. The price is increasing in your face. So basically, I want the price to spike up on the ask and see that there's massive buying. When I see that, I want to be part of it, because I know whenever I buy in at $1, in a matter of seconds, it's going to be $1.02, $1.04. That's already profit. You understand? That is profit. From $1 to $1.04 is 4 cents I gain just because I got in when it's going up. A lot of people have fear. Oh, I'm not going to do that because the moment I get in, it's going to turn on me. Well, that's your opinion. That's your individual bias. That's your thinking. That's not reality. The market is not showing that in the level 2 at that moment. You understand? Like at that moment, all you see in the ask is the price going up. It's not telling you, I'm going to go up and then I'm going to go down. You don't know that. That's your assumption. That's your thinking. That's your bias. That's your fear. That's you're scared. You're scared. You know what I mean? Like you're scared. That's all it is. It's your brain telling you you're scared. You don't want to jump in because it's going up. And the moment you think, your mind is telling you, the moment you jump in, it's going to go against you and you lose money. But you don't know that. Like the market is not telling you that. That's you in your mind telling yourself that. There's a big difference between what you see in the market and what you say to yourself. What you say to yourself is the struggle that people have in day trading, because they fail to refuse to see what is really happening in their face. And what's happening in the face is that people are buying the crap out of the stock, and they're bringing the value of the stinky shoes from 100 to 900 in real time in front of you, and you refuse to see that because you fear that the moment you jump in, it goes against you. Why do you fear that? Because you've done it before. You've done it before without knowing how to do it. And that's why you fail. Because you got punished in the past because you didn't know how to do it. And now you fear that every time you do it, it's going to happen again, all over again. So you refuse to do it. You think that, let me just hang out here. Let me remember what my neighbor sold his stinky shoes for, and let me hang out by his door on the sidewalk. Maybe some dude will come and buy my shoes for the same thing that my neighbor got. Because you feel safer. You're safe. You understand? The rush of flushing against you is not going to happen. I got news for you. You already missed the move. Whatever you're waiting for might happen or might not happen. That's 50-50. That's gambling. That's not high level of certainty is going to happen. You don't know that. You don't know the future. You don't know that at all. So if you want to hang out by your neighbor's door on the sidewalk with your pair of shoes in your hand, waiting for somebody to drive by and pay whatever your neighbor pay, good luck. Good luck. It might happen. It might also not happen. It's 50-50. And by the way, if you do that, let's say you stand there for 3 days with your pair of shoes hanging. Please buy my pair of shoes for whatever my neighbor paid for or got his butt off. Let's say it's $1, $2. You're sitting there. People driving by day and night, they don't buy your shoes. You're sitting there like an idiot. Buy my shoes. My neighbor did it. I could do it too. 5 days pass by, you don't sell a pair of shoes. Out of nowhere, there's a thunderstorm. A lightning hits you and kills you. You're done. That's it. There's no more shoes. You got no shoes. You're dead. You understand? You're dead. You're dead. That's it. Demise. Gone. Get it? Somehow you believe in religion and you get resurrected. You find another neighbor's house. Let me go to my different neighbor with a pair of shoes, and you stare there like an idiot, sitting there again. A pair of shoes, please. Buy for whatever my neighbor paid for or whatever. Buy. 5 days pass by. Another freaking thunderstorm. Bam! Kills you again. Boy, do you understand that if your stop loss is 2% risk, you could only handle 50 thunderstorms, right? The moment the 50th thunderstorm strikes you and kills you, you out of the game. You're not trading for crap. You're done. You got no money left. Is that what you want? Go ahead. Enjoy the thunderstorm. Good luck. 50-50. You might as well go play blackjack. You might have a greater chance. But sitting by your neighbor's house is a horrible recipe to get stricken by thunderstorms in a lightning storm, you know? And you can only be resurrected 50 times if your risk of the thunderstorm is 2%. The likelihood of a buyer driving by and buying your shoes for whatever your neighbor paid for, when the market is showing you something else, you're hoping, you're gambling. It's just a game of chance. You shouldn't be day trading, bro. Like that's not it. That's not trading. Trading is like a business. Let's say you have a store that sells pair of shoes. These are brand new shoes, not stinky shoes, all right? So brand new shoes. You have a store now and you want to sell brand new shoes. And you go to a wholesale and you buy the shoes for $10. And you buy 1,000 pair of shoes. You have your store and you put it right there you put the banner in the front. Cheap shoes for $20. You buy them for $5, you sell them for $20, you keep $15 profit. Isn't that what a business is supposed to do? You buy cheap shoes, sell it for more money, you pocket the difference, $15 out of 1,000 pair of shoes. It's $15,000, right? Isn't that the same thing you're trying to do in trading? Right? You buy the shoe, the stinky shoe, at $100. You sell it at $900 the moment people refuse to pay more. And you pocket the difference. That's day trading. That has nothing to do with my freaking neighbors and stinky pair of shoes they sold or bought. And nothing to do with that. So why are you wasting your time? Like, I don't get it. It's so stupid to me to think like why? You think even like that? Your neighbor's transaction 5 minutes ago has nothing to do with you. If you're thinking of your neighbors, you're already hoping. You're thinking is gonna derail your trading because you're allowing this too much information than what it needs. This thing only needs to know what the price is now and which way it's going right now. That's all you need. So if you look in the level 2 in the ask and the price right now is at 240, and now it's at 243, and now it's at 242. What are my eyes, what are they seeing? Is the price going up or is the price going down? I know it's a stupid question, but clearly the price is going down. Do I want to trade? No, of course not. I'm gonna wait. How long am I gonna wait? I'm gonna wait forever until the perfect scenario shows up for me. Oh, Frank, what is your perfect scenario? My perfect scenario, I told you already, it's in the screen right there. You see it? You see that huge green candle? Okay, that's a huge green candle. Let's assume this is the biggest candle right now, okay, on the screen. This little red one here is the pullback. So big green candle pulls back. Now, second criteria, did it go halfway to the other one? Was it a small little pullback or is it a big pullback? I think this one is a big pullback. Would I jump into that? Absolutely not. Why? My entry requires a little pullback, a tiny little pullback. Why? The tiny little pullback needs to be like less than 1/4 of the big old candle. Why? Well, because if I have a huge order of people willing to pay a higher price for their pair of shoes, and then it changes a tiny bit to the other auction house, and people are willing to just pay $90 instead of 100, and it goes from 100 to 90, but it fails to get to 80, and immediately jumps back out and goes all the way to 900. That's the second candle. That one right there, after it changes, after it goes from going down to going back up, that's my profit highway. That's what I'm taking. Why? Well, in a scheme of probabilities, from 0 to 100, where 50 is halfway, and 100 is more likely and 0 is less likely, if a massive order of buyers come in, they take the stinky pair of shoes at a higher price. Then some other buyers pay a little bit less to like 90, but never lower than that. And then the next auction house sells the shoes from 100 all the way to 900. Now I know there is a high level of certainty that more likely than not, the moment I go in at 100, it's gonna go to 110, 150, 200, 900. You get it? That's the key. That's the confirmation that people talk about, but they don't see it in real time. The confirmation is never based on history. The confirmation is in real time, in front of your eyes. Why? Because if there's massive buying and then it turns into small little selling, that means there's no more sellers. They're gone. They went home. Actually, they went to wash the cars at the neighbor's house. Okay? And the only ones at the party right now, in real time, are people buying for higher prices. I'm taking the gravy train to the high side and then make my profits. Now, a whole different topic has to do with risk management. I could mention that another time, but I do have to give my voice a break. I appreciate it, guys, listening. Hopefully it helps you. It's your money. Your money. Like, I don't get it. You're gonna trust your neighbor with your money now, man. I don't even trust myself with my own money, much less my neighbor. But the goal is to make a profit, not to hope, expect that somehow my neighbor's gonna go somewhere. Come on, bro. Like common sense, you know? So if I'm gonna risk $20 somewhere, I wanna make sure I get $22 back. I don't wanna get 18 back. I want 15. At a minimum, I want my 20 back. At a minimum, I want my 20 back. I much prefer to have 30, 50, 100 back. But if the market starts changing in front of my eyes and all I'm able to get is $22, well, I'm running with $22. I'm not gonna hope it's gonna continue higher. If it's already changing in real time, that's it. That's the sign for me. It's changing. There's no hoping, there's no expecting, and there's not hoping that somehow these people are gonna listen to my neighbor. Like, that's stupid. That's illogical. That makes no sense. You have to concentrate, or I have to concentrate on the actual price changes. And that's it, nothing else. That's why people have been trading for a while. They barely ever trade. They come into the market and they wait and wait and wait and wait until there's a strong likelihood there's buying. And that's it. Jump on that. Nothing else. You strike, even if it's half a candle, one candle, that's it. That's what you need. You know, you do it with 10 shares, you might get 15 cents back. You do it with 100 shares, you might get $1.50. You do it with 1,000 shares, you might get $15. You do it 10,000 shares, you get 150. You do 100,000 shares, you're shifting the market. You get my point? Like, that's the key. That's it. How do you control that? Well, that's your emotions, your thinking, your greed, your fear. This is it. To be able to separate that from doing what you have to do, that's why people fail. They can't do it. They allow this to get in the way. The same way you give credit to your neighbors for something they have nothing to do with, they allow this to interfere with the execution of the trade. And that's bound to fail. That's it. I hope I was able to explain to you guys how I do it. And you could take the positive, take the negative, whatever, leave the negative out. Hopefully whatever you establish for yourself works for you. If it hasn't worked, maybe you're giving too much credit to the thinking. Give up on that, because there's no thinking in this game. Like, literally, there's nothing to think. There's nothing to think. The market is telling you the price right now, the amount of volume that is happening, and which way the price is going. And that's all you need. That's what they use in the year 1900, 1907, 1930. That's what they use. That's it. The ticker tape. Nothing else. No charts, no candles, no moving average, none of that. Just the price changes and the amount of buyers willing to pay more and more and more. And that's all you need. I mean, that's all I need. I don't need anything else. I strongly recommend to day trade with paper trading account, as to not risk your money until you fully understand the entire day trading aspect of how it works with the market and level 2 and all that.